And in your years and your experience, this sort of volatility, how much are we sort of getting used to it?
Well, you can never get used to this kind of volatility. And in clients, these have been very tough markets. And as you expect, clients' emotions are running high. Frankly, it's a time when clients are looking for advice and what our financial advisors do at levels we've never seen before. I think when we look short term, clearly we expect to continue to see choppiness in the markets until we get to the other side of the Fed tightening cycle. So the challenge here as we're advising clients is to try to, help them keep today's volatility in perspective, but look medium and long term. And on that basis, we're incredibly bullish. And if you take a little bit of a broader view.
Why?
Well, hey, think back, this month is going to be the 35th anniversary of the crash in 1987. Mm-hmm. Since then, the S&P is up 20x. If you're thinking about what's the position of the U.S. economy, our markets, U.S. businesses over the medium and long term, you can't help but be bullish. And, at Merrill Lynch, we've got a particular seat to see that because so many of our clients are achievers. They're building great businesses. They're investing for the future. And so when you spend time with them, it makes you optimistic. But, broadly, when you think about the talent, the level of innovation, the flexibility in the U.S. economy, there's no investment story in the world that can match it.
Are clients coming to you, though, for the first time in a while and saying and asking, is cash no longer trash?
They are absolutely saying that. They're not saying it in such a catchy way as you just did, but they're certainly asking about yield. And for the first time in a long time, the bond market is of interest to clients. We're seeing clients reallocating cash, in some cases going from bank deposits to other short-term vehicles. They're thinking, and our CIO is thinking about increasing exposure to fixed income. And so I think a balanced portfolio is becoming more intuitive for clients. Now, that's easy to say. It's been hard to experience in the last 6 months because nothing has been working. Of course, with equity markets and fixed income markets experiencing their worst period in 50 years, a 60-40 portfolio didn't give you diversification. But the right way to think about this, to your question, is on a go-forward basis. You can't invest with your eyes in the rearview mirror.
Andy, you're a man who understands institutions. You're a man who worked at the White House as an age. You're someone who knows intimately the impact of the Federal Reserve, of central banks to the world. At the moment, we are so focused on the impact of the Fed at the moment. Is that really the key area of concern for your clients as well, what they're doing at this moment? Well,
I mean, on a short-term basis, clearly the Fed is moving the market. The Fed's focus on price stability, we think, is the right one. The Fed's, just in recent days, and other central banks around the world, making it clear that market stability broadly is a focus. These are what investors, they need to hear over the medium and long term. We need the Fed playing the role that it always does around price stability and creating a long-term strong backdrop for what's happening in the real economy. At any inflection point and transition point, when the Fed is in the markets as they are, it's going to cause the pendulum to swing fairly widely. And so that's happening today. For our clients are not on trading floors and thinking about where to reposition themselves for tomorrow. They're thinking about retirements, kids going to college, other commitments down the road, philanthropic and otherwise they'd like to make. So their time frames are 5 years, 10 years, 15 years, or even further. Over that time period, hey, the Fed sticking to their role is something they'd like to see. And then what's happening, with companies and their earning power and these underlying areas of strength in the economy, that's what drives the investing story over the long term.
So obviously your clients in aggregate are longer term investors, but talk about, I guess, the older demographic there. I mean, the big question I always get from my family members who are in their 70s and above, they're looking at their retirement accounts and they're wondering what has happened over the last couple of years. Should they do something different? Should they shift? Despite the fact that they've made probably a fortune over the last last, 30, 35 years.
Well, I mean, to a certain extent. I mean, we can't forget, over the last, since the great financial crisis, one of the areas of the marketplace that have experienced the most pain are retirees who've been on fixed income who have had to look somewhere for yield. In many cases, owning more equities than they might otherwise want to, and taking some equity price volatility to get, the yield was there in the equity market. This is going to enable a little bit of a back to the future where retirees once again are going to be thinking about fixed income markets. They're going to be looking at tried and true strategies, putting bond ladders together.
Right.
And to the extent that they own bonds today and they're concerned about what's happened in the mark to market, we've not seen credit risk materially increasing. And so, hey, in most cases, those bonds are money good, and they're going to be rolling as bond ladders roll forward.
On that note, it was interesting. I think Moody's and some strategists at Citigroup raised their forecasts for default risks, default forecasts, highlighting some of those weaker balance sheets and a big Federal Reserve and the pressure then that puts on some of the lower rated credits. Are you optimistic? Are you also concerned about the lowest of the low?
Well, again, we try to construct portfolios with an eye to the risk tolerance of our clients, their sophistication, their time horizon. Now, there's an opportunity in what you said for some of our most sophisticated clients because they're beginning to think about areas of the fixed income market where money is put to work around distressed credits, and that can be a very interesting place to commit capital today. It kind of connects to a larger story, which are, again, our wealthiest clients are taking a step back and they're saying, hey, equities, bonds, cash, am I really fully diversified? Probably not if I don't also own some alternative investments. And so we're seeing clients allocating significantly more to hedge funds and private equity strategies. And on the private equity front, distressed credit is certainly a place they're looking.
Caroline, I thought you would jump in and ask if crypto is the new alternative asset class. Maybe
well, it hasn't worked this year, at least, as a diversifier.
No, I mean, hey, this is a place where the underlying technologies, what blockchain means, the potential tokenization is going to be an important trend. We don't have cryptocurrency as an offering for our clients today.
Bank of America's Merrill Wealth Management business rolling out a new digital program matches consumers with an advisor to meet rising demand for financial guidance. The firm's new Merrill Advisor Match, aiming a new program at newly affluent consumers, those with at least $250,000 of investable assets. Really pleased to say we can bring back in Andy Sieg, of course, president of Merrill Wealth Management. Why now?
Well, this is Merrill Lynch is the firm that 100 years brought Wall Street to Main Street. We think this is the perfect moment to make Wall Street more accessible to more investors than ever before, to bring financial advice and the power of professional financial advisors to more American families than ever. The digital revolution is enabling that. And the need is there. As we like to say, there's a bull market for advice. You think about the kind of volatility that we've seen in the markets, and as wealth is increasing right along with it, hey, there's a need for professional management to help people navigate what they own today.
How large is this total addressable market of $250,000 of investable assets?
It's $15 trillion plus just in the mass affluent segment in the U.S. The total U.S. financial assets are north of $60 trillion. But one of the things that's most interesting and exciting to us is some of the people who are having a hard time finding financial advisors are part of families or communities where they're the first individuals in that family who have really accumulated significant wealth.
Where from? Where are they accumulating it from?
Well, if you think about the wealth creation that's happening in the Latino and Hispanic market, African American families, in some cases, women in the workplace for the first time, generating significant savings. In many of these cases, they can't go to the normal places that people have gone to find a financial advisor, ask their parents, ask a cousin. And so they find themselves a little bit shut off from access. And it can be awkward, even intimidating, to be out in the market looking to hire a financial advisor. So what we've tried to do is create something that is, frankly, as intuitive as a dating app might be, and apply that to the market for financial advisors. And we're launching Merrill Advisor Match today with great interest, and we've also got 5,000 members of the Merrill Lynch Advisor Force, the Thundering Herd, that have loaded in their information and their profiles. And what this tool is going to do is help match them to clients. And what clients are telling us they love about this is in no way, this is algorithmic, but it's not a simple thing. What clients go through a quick process to tell us a little bit about how they like to receive advice, a little bit about their personality. We ask some fun questions. If something breaks at your home, is that the sort of thing you repair yourself, or do you like to get an expert, or are you the kind of person who just ignores it and hopes it goes away? And so with all of that, it helps us navigate down to 5 financial advisors whose profile we show to a client, and then just with a point and click, you can make contact with that advisor.
How much does that, though, change the personal relationship, if at all? I mean, we know a big part of this relationship, if you will, isn't just about the expertise, it's also about the bedside manner.
Well, what we're trying to do, you're absolutely right. So much of the magic of a strong client-advisor relationship is personal chemistry. You work the same way, you tend to think about problems the same way. It's hard to find that. And what we're trying to do with this tool is make it more intuitive and hopefully increase the probability that your match is going to be a match that really works medium and long term. At Merrill Lynch, our advisors have typically had client relationships for well over 10 years. In many cases, I meet clients who have had a relationship with the same financial advisor or team for 20 or 30 years.
You mentioned an effort to sort of reach out to kind of the growing wealth that we're seeing in Black communities, Latino communities. It's a much more diverse world out there when it comes to wealth. Is that also reflected with regards to your staffing?
Oh, 100%. When we look at our training programs, which is really the best leading indicator, what we see is the right level of representation across ethnic groups and the right level of representation of women. You know, this has historically been a business with a lot of people that look like me, you know, middle-aged, bald, white guys.
Yeah.
And you know, what we're seeing in our hiring efforts and our promotion efforts is the kind of diversity that we need to have. And we don't consider that kind of a nice to have. That's a core competitive imperative for us. When we talk about modern Merrill, diversity as a commercial imperative is a core part of modern Merrill.
Where geographically then are you seeing the biggest growth in clients and financial advisors, particularly as we've talked a lot about the Great Migration, and New York and San Francisco or LA are no longer sort of the big ones. There's a lot of migration south as well.
Well, I mean, one of the amazing things about the U.S. is wealth creation in the U.S. This is a national story. It isn't red states or blue states. This is red, white, and blue. There's wealth creation happening across the U.S. Our business naturally is very strong where there has been migration. So you think about Florida and what's taken place in Florida in the last 5+ years. We've got a growing team. We've doubled the number of private wealth advisors in the state of Florida just in the last 2.5 years. Texas, very similar story. Nevada, there's been a lot of migration into Nevada. But again, anywhere I point to, I could give you, 10 or 20 other cities that are a little, out of the migratory trends, but where there's enormous wealth creation that's happening. And that's why a great strength of the Merrill Thundering Herd is we are on Main Street around the country with 15,000 advisors, 600 offices. We're here in Midtown Manhattan, but we're on Main Streets all over the U.S.
Thundering Herd, I like that.
Hey, thank you.
You've been doing this for a long time. How much longer are you going to do it?
As long as Brian would like me to. I've been at Merrill for 30 years, and every day I get up and say, working with our clients and working with our advisors is just getting more exciting than it was the prior week. So I love what I do. I feel privileged to be able to work with the clients we do.